Morning, Steve Free in Chicago with the morning grain comments. Well, it's Friday. It's all quiet on the Western Front after yesterday's steep sell-off in commodities and also in the financial markets. We did note that China came out and said that their GDP was 6.5% versus guesstimates of 6.6. A little bit more examples of the fact that China's economy may be slowing during this trade war issue. We also note that yesterday the November beans rejected the 880 area, and now we're testing 860. And again, most of that had to do with the poor export sales and talk that normal South American weather should suggest long-term lower soybean prices. The only thing is that we're estimating that harvest might be 45 to 47% done, and got a lot of emails overnight from Iowa talking about very high damage soybeans due to the recent wet weather, and we'll see if that offers any support either to the basis or to the futures. Corn rejected 380 and tested 370. Again, more people than not suggest that there might be a bounce in corn after the harvest given the solid demand. And wheat rejected 530 and is pulling back towards the 510, 515 area. And again, wheat stays in a trading range because of too much supply worldwide today. The market hopes that down the road Russian exports will decline, U.S. export demand will increase, and that might offer some support to wheat prices. Long term though, normal crops in 2019 suggest wheat prices don't really have much upside potential at this time. We also note that from a weather standpoint, we're going to be clear through the weekend. Might be some rain starting popping up in the western Midwest over the weekend or early next week. We'll be watching a tropical storm off of the Mexican coast to see if it brings moisture into the southern plains. We also note that this morning's weather forecast suggests the Midwest could see some soaking rains after November 2nd. So again, not a lot of confidence in that, but farmers should focus on harvest just in case it gets wetter. NOAA came out yesterday with a winter outlook for the next 90 days for a mild winter for the Midwest with above normal temps and below normal precip. So that's good for Chicago if it's true. Typical El Nino year though, the southern third of the United States will remain wet and cool. So China said they have ample supply of soybeans going into this trade issue. And Argentina Transportation Union announced that they might go on strike next week to call for increased hauling rates. Funds yesterday, sellers of beans, meal, oil, corn, and wheat, short about 30,000 beans, 40,000 oil, long about 40,000 meal. Still even in the corn market and short about 20,000 wheat. As always, these are my thoughts and not those of ADM or ADM Investor Services. Have a safe and profitable trading day.